What's going on, guys? I'm doing a closing month-end wrap-up. We'll do it at Global Macro here, Friday the 30th. So end of the week, end of the month. It's important just to see where the closes are. And we'll talk about some of the moves we made this week. Crypto, I haven't been trading that much there, but a lot going on in S&Ps, the dollar, how we're setting up for volatility in the next week. And, whoops, sorry about that. Let me minimize the video here. All right, so just get into the charts. Normally I start with the dollar. I want to start with S&Ps. So the most important cycle right now is today it finishes out an 8 count. So there's a lot going on in this chart. You'll see the arrows. I never really explained this to people maybe that are new. The magenta or red arrows is where we're shorting, and then we're covering into lows, shorting, covering, re-shorting. This is just S&Ps and the signals we're doing in futures. But if you'll notice, if you'll ignore that, I can even take the drawings off. That's not what I wanted, though. If I take the drawings off, I lose the cycle work. Anyway, I'll just show. So notice the stochastic cycle has done a very good job. There's a nice rhythm, right? We cycled up to the highs. This was the first best chance you had to short the market since it really started to break down. It wasn't very as clear timing-wise when we double topped up here. You'll actually notice there was 2 cycle counts, though. Back on at the start of the year, we double topped 29.47. Cycle count here, 8, another 8 count. Actually, it was more like a triple top. Stopped making new highs. First sign of weakness was cracking 29.07. And then when we couldn't hold the bands here, this is when you saw the waterfall effect. And risk happened slowly and then all at once. So we've been calling for risk or for growth to slow. We've had a call of inflation peaking. I've put out a couple reports on being long the dollar going back through the middle of this year. And then we made the call that there was a global macro shift to growth slowing. You want to be long dollars, you want to be long treasuries, you want to be out of tech, short high beta tech, all the FANG stocks, all that stuff that was high growth and accelerating. Now, after 9 quarters of consecutive record growth, that's going to cool off and go from great to good. And we don't just care about are the numbers good, we care about are you going from great to good to okay to bad? And then are you going from bad to not as bad? That's still bullish if you go from, it's the end of the world to, oh, things are not horrible, now things are just bad. That's actually an acceleration or a positive change on the margin. So we care about, we're cyclical thinking and care about are things on the margin getting better or worse, not are they good or bad. Good or bad is absolute, doesn't tell us anything. So you listen to old Wall Street talk about, oh, the economy's good, the Fed, oh, the economy's good. But they don't see the turns from it going from great to good to maybe even not so good. And that's not our call yet, but growth is slowing. And when that happens, the market's going to start discounting that. And so that's what our call has been. It's been the right call. And then this is just another bounce that we can sell into. Doesn't mean you can't take longs. I mean, we were buying Apple down here on the long side. I was buying in and out of Dow futures in here. But back to the cyclicality of this, you can see that we completed 1, 2, 3, 4, 5, 8 days down. This is daily chart, 8 days down into the middle of October. Then we had another cycle count into the lows. It's an 8.6 frequency is one of the waves that we like to watch. And so sometimes it's going to be 8, sometimes it's going to be 9. But we basically had a 9 count into the lows and then rallied 8 days up before the next turning point. 8 days, had another full cycle. This could have been considered a 9 count, really. If this is if this is 8, this is 9 again. And so we could count this as 1, 2, 3, 4, 5, 6, 7. Maybe you have one more day, Monday. That wouldn't surprise me, actually. So we're either in an 8 count here or a 7 count. But 7, 8, 9, whether that's Monday, Tuesday, into Wednesday, we're still looking for a lower high, guys, with this cycle. And so you can see how the daily cycle's done a good job here. Crosses over, boom, drop. All right, rallies, crosses over, drop. Right, rallies, cycle gets high, collapse. All right, cycle is low down here. We were saying this is a short covering opportunity. You can see where we were booking gains in our spider puts. Okay, this is the same setup we're doing, but we're using puts. We're covering beautifully here. We rolled down to 265, 62.5 puts from shit that we were long up here at 277, 280. And then this is us coming out of some of the short legs. So maybe there's different ways you can play this stuff, but you can be rallying here and have short legs where we were long puts, but then also shorts and puts. And as we rally back up, we come out of these short puts. That's why I try to designate that in magenta here. And then when I'm actually going long puts versus covering short puts, those are in red. So red is getting more short. This is me just taking profits on the short legs, and I haven't really started hitting it back down on the puts on the other side yet, and that's what we've been waiting for, this daily cycle to come up. We talked about that at the beginning of the week. Cycle's low, guys. You need to wait for it to come up. Just like the same thing we were doing on the euro. You wait. We were waiting on the daily cycle to come back up. Still kind of waiting on that. You know, this was a short covering opportunity down here at 120, at 112.69. Then we were able to short some stuff again this week in front of 114. It's just another example of how we're using the cycles. When it comes to the VIX, this is another obvious instrument to use when we're trading. We're back cyclically very low, which is signaling another opportunity to sell. Just like here when we topped out on around the 8th. I mean, the VIX was nice and low again. Went from 27, 28 back to 18, 19, 17, 18, 19. So it's kind of setting up the same way. We had a couple of fake outs this week. Let me show you an actual futures. And we were trying to get more aggressively long, and then I had to cut the risk here into the close. And so let me just show you what we were doing as a team. You'll notice that the bands were all negative for most of this rally. All right, so the volatility is coming down. But here we started nibbling again. I didn't do anything here, which I kind of thought was a mistake, but I was already short S&Ps at the time, so I didn't want to get too aggressive. So I then, though, had I added another lot here, this would have been much more profitable, because if you're only long one contract, I didn't want to lose my position. If I had 2 on, I could have taken 1 there. But I did add back here, which then the market fell off. Again, I did some stuff around futures, so I decided not to make a move here. But then I did chase a little bit here because the bands were nice and tight, and we started to break out. And it looked like we were fanning up, and the market just wasn't ready to go. So both of these moves this week was a little bit of a fake out as far as volatility. I mean, last time we did that, when the market really ripped. So last time we broke above the bands here, it screamed. So we're not. So looking at volatility, we're maybe not quite ready. That's maybe I'm saying maybe it's Monday, Tuesday. We have a couple more days here to finish out this cycle. And maybe that puts the VIX down to 16.5, 17 again, front month. So I did buy some stuff here late in the day, and I don't want to go long home this amount of volatility if that cycle plays out. So I cut 2/3 of that risk. It was only gave back like $1,000. But I am short S&Ps. We have XLK puts, which is being short the market technology. I did short a little bit of S&Ps into the close, just one contract. We have some puts that we laid out today and yesterday. So small short S&Ps, but nothing too aggressive. I want to put some SPY puts on, like I said, probably Monday, Tuesday. Everybody's focused on the catalyst here this weekend, tariffs, blah, 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 everything, etc. But the bottom line is growth is decelerating. And look, you can chase these China tariffs around all day. The fact of the matter is the market made new highs with all this tariff talk fears, and then the market crashed when Trump was actually pulling that in and doing deals with Mexico and doing deals with Canada. So the market made new highs on tariff fears, and then the market crashed on trade deals. So this nonsense trying to try to time the market based around old wall and the financial media going around and around with tariffs is a joke. It's about growth slowing. So we've had inflation crash, inflation expectations crash with oil going down 30-35%. And now I've already explained what we're peak cycle in earnings, we're peak cycle in margins. We're up for 10 years. We just had 8-9 consecutive quarters of growth. It's just the data is going to slow. And so the market's already starting to discount that, and that's what matters more. You can look at long bonds. We've had a great week, great month in long bonds. Here we are just closing into the highs. I mean, we've been bulls. We've been bulls for this in pretty much entire last 3 months. This false breakout was a little bit tricky here, but just keep adding and reducing to your core long position. And I think you could see the 10-year 280, 275, maybe even 250. It depends on how bad the first quarter is, but GDP is probably going to be quite the disappointment in January. So still looking for a pretty crappy fourth quarter and first quarter. But irrespective of that, this is a downtrend, so that's how we want to play it. All right, guys, I think that pretty much sums it up. Hope you had a great week. And it's pretty much the same game plan in the next week. Let's stay long dollars. Let's look to sell risk at the top of the cycle here, at the top of the trend, the risk range. And stay bullish on treasuries. We'll keep buying dips there. We'll keep buying dips in the dollar. There's some other things that we talked about shorting, like high yield, that we haven't pulled the trigger on. You know, EM, we had some good shorts there, some individual stuff. But anyway, if you guys enjoyed this, or you want to actually follow the market with a real model and process, my company is Jenkins Risk Management, JenkinsRM.com. You can read a little bit of. I don't even think I have my bio on here yet. I need to do that. But anyway, my background is I ran a rates desk and traded treasuries for 10 years on the institutional side. We had a directional model that we used to cover all the primaries and large hedge funds and money managers. And the same model now we're doing with traders all around the world, both institutional professionals and individuals, maybe trade for themselves or just getting started. So I have a whole model and process that you can learn. It's 9 hours. I have a trading course. We have a live trading room. This is new. So we have a team, $200 a month. You get real-time alerts, which is a $100 a month product, and I signal, oh gosh, I don't even know how many trades I've signaled today. You can see, guys, these are all my trades here just on equities, my signals. 5 hours ago, 6 hours ago, 7 hours ago, 10 hours ago. I'm talking about chart. I give a visual. We're long the Dow, sold out. Bought the Dow, sold out. Bought the Dow, sold out. Sold into the close here at 2,500. I mean, that was worth $1,000 on one contract today. So I mean, for $100 a month, you're getting a ton of. It used to be just crypto that we would have people paying for $100. Now you get all markets. So anytime we're making a move or we see something to do directionally in the model, we're putting that in there. But we just have a community of about 1,000 traders right now. and I want to keep growing it. If you're interested in learning, I have programs for that, options. I have a mentorship program here that not only do you get access to the live trading room, you get the course, but then you get 8 sessions with me, 2 hours each, and we strictly focus on you as a trader. I work with your trading plan, get to know you as your individual habits. We talk about the psychology of trading, stuff that you might be struggling with, because all that stuff you need to kind of iron out anytime you want to make a breakthrough, whether it's your consistency you don't have down yet, or you're just suffering losses. That's usually the first thing you got to iron out. Anyway, that's kind of where we're at here on the services. I'm going to start blogging some more also. You can join the chat room for free and then figure out where you want to get involved with us. That's okay. And if I have my bio on here, just when I'm curious. Okay, I do. Anyway, guys, have a great weekend. Some of you had a really nice week, so keep it up. Whether you were short bond, you were trading long bonds, and some of you did really well in oil this week. So keep up the good stuff. Send me your trades. Have a great weekend. I'll probably chat with you on Sunday.